Assalamualaikum. My name is Nur HFT20303. My train number is H24H3249. So right now, I want to talk about introduction. First, Genting Malaysia and Sharila Hotel Malaysia are organizations that play major roles in hospitality, tourism, and wellness industry. These companies are chosen because they offer valuable insight into how large-scale resort operation and luxury hotel service contribute to Malaysia's economic growth. Next, Bintang Malaysia offer a wide range of facilities such as hotel, restaurant, theme park, shopping outlet, and many more. This feature clearly positions the company within hospitality and tourism sector, as it provides lodging, leisure activity, and entertainment under one destination. In addition, Sharila Hotel Malaysia represents the luxury accommodation segment and is widely recognized for its world-class service standard. These elements make Sharila Hotel Malaysia a strong contributor to both tourism and wellness sector as a service traveler who seek comfort and exceptional service. Lastly, financial ratio help manager evaluate the company profitability, liquidity, solvency, and efficiency. Forecasting is equally important because it allows both companies to predict future trends and prepare strategically. Genting Malaysia use forecasting to plan for visitor volume, staffing requirement, entertainment schedule, and future development projects.
The background of two well-known companies, which are Shangri-La Group and Genting Group. Both companies operate in the hospitality and tourism industry and have a strong financial presence locally and internationally. First, I will begin with Shangri-La Group is mainly involved in the hotel and hospitality industry. It operates luxury hotels, resorts, service apartments, and residences under several brands such as Shangri-La Hotels and Resorts. Today, Shangri-La has more than 100 hotels worldwide, especially in Asia. The company is well known for its high-quality service, strong brand image, and premium customers experience, which contributes to its strong financial performance. Next, I will continue with Genting Group. Genting Group is best known for Genting Highlands Resort, which is the only legal casino resort in Malaysia. Besides that, the group also operates hotels, theme parks, casinos, cruise lines, and plantations. Genting Group has expanded its operations internationally, including in Singapore. Due to its diversified business portfolio, Genting Group has a stable financial structure and strong revenue source from multiple sectors. Both Shangri-La Group and Genting Group are major players in the hospitality industry. Shangri-La focus more on luxury accommodations and premium service, while Genting Group is known for its integrated resort and diversified business. These trends allow both companies to maintain financial stability and long-term growth, making them suitable for analysis in this finance assignment.
Assalamualaikum and good day. Today I will present an analysis of liquidity ratio for two companies, namely Genting Malaysia and Shangri-La Hotel. For Genting Malaysia, the current ratio decreased from 1.29:1 in 2023 to 1.05:1 in 2024. This indicates the Genting's ability to cover its short-term liability using current asset has weak. Although the ratio is still above 1, the financial safety margin becomes small in 2024. Next, Genting Malaysia quick ratio also declined from 1.22:1 to 0.98:1. This means that excluding inventory, Genting liquid asset in 2024 were almost insufficient to cover its short-term liabilities, indicating tight immediate liquid compared to the previous year. For the cash ratio, Genting recorded a decrease from 1.06 in 2023 to 0.89 in 2024. This shows that Genting no longer had sufficient cash alone to fully cover its short-term liability indicating pressure on this cash liquidity. Conclusion of Genting Malaysia trend show that Genting Malaysia liquidity weak from 2023 to 2024 with noticeable decline in all three liquidity ratio.
Assalamualaikum, my name is Noraina Maisara binti Arizal and my number metric is H2483685. Next, we move to the profitability ratio. Profitability ratio analysis is used to evaluate the company's ability to generate profit from its operations, asset, and shareholders' equity. For Genting Malaysia, the profitability ratio analysis are gross profit margin, net profit margin, return on equity, and return on asset for the years 2023 and 2024. Firstly, the gross profit margin remains stable, increasing slightly from 27.15% in 2023 to 27.16% in 2024. This stability indicates consistent cost efficiency. It's due to effective control over cost of sale and stable pricing strategy. Next, the net profit margin increased from 9.95% in 2023 to 10.93% in 2024, showing an improvement in overall profitability. This improvement occurred is due to better management of operating and non-operating expenses and higher revenue generation. In conclusion, Genting Malaysia profitability performance improved in 2024. Particularly in terms of net profit margin and asset utilization, while the decline in return on equity was due to change in the company's equity structure. However, return on equity declined significantly from 48.03% in 2023 to 5.23% in 2024. This decrease occurred is due to an increase in shareholders' equity, which reduced to return generated per unit of equity. Lastly, return on asset improved from 5.15% in 2023 to 5.61% in 2024, in indicating better asset efficiency. This improvement happened it's due to more effective utilization of asset to generate profit.
Assalamualaikum, my name is Nur Aini Syafiqah Muhammad Zaidin and my metric number is H2483505. So I will present about efficiency ratios. This section discusses the efficiency ratios of Genting Malaysia for the years 2023 and 2024, which include total asset turnover, working capital turnover, and account receivable turnover. These ratios measure how efficiently the company utilizes its assets and resources to generate revenue. Firstly, the total asset increased from 0.249 in 2023 to 0.261 in 2024. This indicates that Genting Malaysia was able to generate slightly higher revenue per ringgit of total asset in 2024. The improvements suggest better utilization of assets and enhanced operational efficiency during the year. Next, the working capital turnover showed a significant increase from 1.55 times in 2023 to 63.22 times in 2024. This sharp increase indicates that the company used its working capital much more efficiently in 2024 to generate sales. It also reflects tighter control over current assets and liabilities, leading to improved short-term operational efficiency. Lastly, the account receivable turnover increased from 31.71 times in 2023 to 47.54 times in 2024. This indicates that Genting Malaysia was able to collect its receivable faster in 2024. The higher receivable turnover suggests improved credit management and stronger cash flow performance. Overall, the efficiency ratio showed that Genting Malaysia demonstrated improved efficiency in asset utilization, working capital management, and receivable collection in 2024 compared to 2023.
Assalamualaikum and hi, my name is Nurul Nasran binti Pandi, #24A3621. I will briefly explain the solvency trend for Genting Malaysia and Shangri-La Hotel. Starting with the Genting Malaysia, the debt-to-equity ratio increased from 0.08 in 2023 to 0.51 in 2024, showing higher reliance on debt. This may be due to additional borrowing for expansion or recovery activities. The debt-to-asset ratio also rose from 0.04 to 0.28, meaning more of Genting's assets were financed by debt. However, Genting showed a slight improvement in its interest coverage ratio, increasing from 2.75 to 2.89, which suggests a better ability to pay interest, possibly due to improved operating performance. Most importantly, Genting's Z-score increased significantly from 1.914 to 6.717, indicating a much stronger financial position and a lower risk of bankruptcy.
After that, I will talk about trend analysis Shangri LA Hotel in 2023 and to 2024. For Shangri LA Hotel, the current ratio slightly decreased from 1.92 ratio 1 in 2023 to 1.64 ratio 1 in 2024. Despite the decline, the ratio still indicates a strong ability to cover short-term liabilities. After that, the quick ratio of Shangri LA Hotel also decreased from 1.90 ratio 1 to 1.63 ratio 1. This shows that Shangri LA liquid asset remains sufficient to meet its short-term obligation without repaying in inventory. For the cash ratio, Shangri LA record a decrease from 4.11 to 3.95. Although it declines, the ratio remains very high, reflecting Shangri LA's strong cash position. Overall, Shangri LA experienced a slight decline in liquidity but continued to maintain a very stable short-term financial position.
Profitability ratio analysis evaluates Shangri-La Hotel's ability to generate profit from its operations, asset, and shareholders' equity for the years 2023 and 2024. Firstly, the gross profit margin slightly decreased from 68.46% in 2023 to 67.79% in 2024. This decline indicates a small reduction in cost efficiency. It's due to higher operating costs such as labor, utilities, and maintenance expenses. Next, the net profit margin increased significantly from 30.09% in 2023 to 23.59% in 2024, showing a strong improvement in overall profitability. This increase occurred it's due to higher revenue from hotel operation and better control of overall expenses. However, return on equity improved from 2.02% in 2023 to 3.75% in 2024, indicating a better return generated for shareholders. This improvement happened it's due to higher net profit earned relative to shareholders' equity. Lastly, return on assets also increased from 1.24% in 2023 to 2.23% in 2024, reflecting improved efficiency in asset utilization. This improvement occurred is due to more effective use of hotel asset in generating profit. In conclusion, Shangri-La Hotel showed an overall improvement in profitability performance in 2024, particularly in net profit, return on equity, and return on asset, while the slight decline in gross profit margin was due to increased operating costs.
I will present about efficiency ratios of Shangri-La Hotel for the years 2023 and 2024. Focusing on total asset turnover, working capital turnover, and account receivable turnover to evaluate how efficiently the hotel utilizes its resources to generate revenue. Firstly, the total asset turnover increased slightly from 0.186 in 2023 to 0.191 in 2024. This indicates that Shangri-La Hotel generate more revenue per ringgit of total asset in 2024. The improvements suggest better utilization of hotel asset and hence operational efficiency. Next, the working capital turnover increased from 2.558 times in 2023 to 3.238 times in 2024. This shows that the hotel used its working capital more efficiently in 2024 to generate revenue. The increase reflects improved management of current assets and current liabilities, contributing to stronger short-term operational efficiency. Lastly, the accounts receivable turnover decreased slightly from 1.429 times in 2023 to 1.359 times in 2024. This indicates that the hotel took a slightly longer time to collect receivables in 2024. The decline may suggest lower customer payment or more lenient credit terms, which could affect cash flow efficiency. Overall, Shangri-La Hotel showed improvement in asset utilization and working capital efficiency in 2024, although receivable collection efficiency declined slightly compared to 2023.
Moving on to Shangri-La Hotel, the debt-to-equity ratio increased slightly from 0.07 to 0.11, showing only a small rise in debt usage. The debt-to-asset ratio remains stable at 0.07, reflecting consistent and conservative financial management. Shangri-La also recorded a very strong interest coverage ratio, improving from 11.33 to 12.31, which shows excellent ability to pay interest expenses. Lastly, although its score decreased from 10.514 to 7.454, it remains very high, indicating very low bankruptcy risk. In conclusion, Shangri-La Hotel maintains stronger solvency with minimal debt reliance, while Genting Malaysia has shown significant improvement in financial stability in 2024.
In conclusion, based on both trend analysis and cost analysis, Shangri-La Hotel Malaysia shows strong and more consistent liquidity performance in both 2023 and 2024. Although both company has a decline in liquidity ratio, Shangri-La continued to maintain a much stronger cash position and liquid asset. In contrast, Malaysia faced increasingly tight liquidity, particularly in terms of cash, which suggests the need for more careful financial management in the future.
Based on the graph, Genting Malaysia gross profit margin remains stable from 2023 to 2024, indicating consistent cost control. Next, net profit margin increased in 2024, showing an improvement in overall profitability. However, return on equity declined significantly due to an increase in shareholders' equity. Meanwhile, return on asset improved, indicating more efficient use of assets. In conclusion, Genting Malaysia profitability improved in 2024, but despite the decline in return on equity. Based on the graph, gross profit margin slightly decreased in 2024, indicating a small increase in operating costs. Net profit margin increased significantly, showing a strong improvement in overall profitability. However, return on equity also improved, indicating better return for shareholders. Meanwhile, return on asset increased, showing more efficient use of assets. In conclusion, Shangri-La Hotel profitability improved in 2024, despite a slight decline in gross profit margin.
So I will present about graph efficiency ratio trend analysis. This chart illustrates a comparative analysis of efficiency ratios between Genting Malaysia and Shangri-La Hotel. Looking at the total asset turnover, both companies perform at a similar level, indicating a comparable efficiency in using their total asset to generate sales. However, a significant gap is observed in working capital turnover, where Shangri-La Hotel shows a much higher ratio of over 60 compared to Genting Malaysia's 12.5. This suggests that Shangri-La is more effective in utilizing its short-term assets and capabilities to support its operation. Finally, for the account receivable turnover ratio, Shangri-La again leads with a higher ratio, implying a faster collection of debt from customers compared to Genting Malaysia overall. While asset management is consistent across both, Shangri-La demonstrates superior efficiency in managing working capital and receivable. Based on the chart, Shangri-La Hotel demonstrates stronger efficiency performance compared to Genting Malaysia, particularly in managing its short-term resources. Shangri-La Hotel record a significantly higher working capital turnover, indicating that the hotel is able to utilize its working capital more effectively to generate sales. In addition, Shangri-La also show a higher account receivable turnover ratio, which suggests more efficient credit management and faster collection of receivable. Although the total asset turnover for both companies appear relatively low, overall, Shangri-La Hotel show better efficiency in converting its resources into revenue, reflecting stronger operational effectiveness compared to Genting Malaysia.
The graph shows the solvency trend for Genting Malaysia from 2023 to 2024. From the graph, we can see that the debt to equity and debt to asset ratios increased, which means Genting relied more on debt in 2024. However, the interest coverage ratio improved slightly, showing a better ability to pay interest expenses. Most importantly, the Z-score increased significantly, indicating a stronger financial position and lower bankruptcy risk in 2024. Moving on to Shangri-La Hotel, from the graph we can see that the debt to equity ratio increased slightly, while the debt to asset ratio remains stable, showing consistent and conservative debt management. The interest coverage ratio improves, indicating a very strong ability to pay interest expenses. Although the Z-score decreased slightly, it remains at a high level, showing that Shangri-La Hotel continue to have very low bankruptcy risk.
Assalamualaikum, my name is Anina Nazira binti Muhammad Nazir and my metric number is H2483602. Today I will compare the financial performance of Genting and Shangri-La Hotel starting with liquidity. First, let's look at liquidity. For the current ratio, Shangri-La is better at 1.92 compared to Genting 1.29. For the quick ratio, Shangri-La also leads with 1.90 against 1.22. Lastly, for the cash ratio, Shangri-La show a much higher liquidity of 4.11 compared to Genting 1.06. Overall, Shangri-La is superior in meeting short-term obligation. Moving to profitability, Shangri-La has a higher gross profit margin at 68.43%. However, Genting is more efficient in bottom line result with a net profit margin of 9.95% compared to Shangri-La 2.02%. Genting also significantly outperformed in return on equity or ROE at 48.03% and return on asset ROA at 5.15%. Therefore, Genting is better at generating profit and returns. In terms of efficiency, Genting takes the lead. Genting total asset turnover is higher at 0.249. For working capital turnover, Genting is much faster at 12.55 compared to 2.55. Finally, for account receivable turnover, Genting record 31.71 against Shangri-La 1.429. This proof Genting is far more efficient in managing its asset. And lastly, for solvency, both have low debt to equity and debt to asset ratio, but Shangri-La is slightly lower at 0.07. Shangri-La also has a stronger interest coverage ratio at 11.33 and a Z-score 10.514 compared to Genting 1.914. This indicates Shangri-La has a safer financial structure and lower bankruptcy risk. In summary, Shangri-La Hotel excel in liquidity and solvency safety, while Genting Malaysia is the winner for profitability and operational efficiency.
In terms of the liquidity ratio, Shangri-La Hotel is stronger and able to meet short-term liabilities, while Genting Malaysia is at a moderate level. For the profitability ratio, Shangri-La Hotel records higher profit margin, but Genting Malaysia is more efficient in using asset and equity based on ROE and ROA. For the efficient ratio, Genting Malaysia show better operational efficient compared to Shangri-La Hotel. Lastly, the solvency ratio show that Shangri-La Hotel has lower financial risk, while both companies are in stable financial condition.
Assalamualaikum, my name is Anina Zrabitu Muhammad Najir and my metric number is H24H2602, and I will explain about liquidity and profitability cross analysis graph for 2023 and 2024. Based on the cross-sectional graph for liquidity, we can see a clear gap between two companies. In both 2023 and 2024, Shangri-La Hotel significantly outperformed Genting Malaysia in terms of liquidity, while Genting maintains a stable but lower ratio. Shangri-La show a much higher ability to cover short-term debt, especially in their cash ratio. Therefore, for liquidity, Shangri-La is a better and safer choice compared to Genting. Moving to the profitability cross-analysis, the results are mixed. Based on the graph, Shangri-La Hotel has a much higher gross profit margin than Genting in both years. However, when we compare their bottom line efficiency, Genting Malaysia is better. Genting net profit margin and ROE are higher than Shangri-La, proving that Genting is more successful at turning its revenue into actual profit for shareholder. In conclusion, this cross-sectional study show that Shangri-La leads in liquidity, but Genting Malaysia is superior in profitability efficiency. Thank you.
The efficiency ratio in 2023 were higher than in 2024, indicate that the company was more efficiency in utilize its asset to generate sales. The deadline in efficiency ratio in 2024 reflect weaker operational efficiency and less optimal use of research compared to the previous year. In terms of solvency, 2023 showed a more stable financial position with a more controlled level of debts. However, in 2024, the solvency ratio increased, indicating greater reliance on debt's financial and higher long-term financial risk compared to 2023.
Good day everyone, my name is Farah Natasha binti Johaini, metric number H24A3336. Today, I will briefly compare the financial performance of Shangri-La Hotel and Genting Malaysia for 2023 and 2024. Starting with liquidity, Shangri-La Hotel consistently shows stronger performance with high current, quick and cash ratios, indicating excellent ability to meet short-term obligations, while Genting Malaysia had adequate liquidity in 2023 but declined in 2024, showing tighter financial flexibility. For efficiency, Genting outperformed Shangri-La Hotel with higher asset turnover and faster receivable collections. Shangri-La's lower turnover is typical in the hospitality industry. Regarding solvency, Shangri-La has very low debt levels with high interest coverage, indicating minimal financial risk, while Genting Berhad improved its solvency in 2024 but still carries more debt than Shangri-La. In profitability, Shangri-La leads in gross and net profit margins, reflect a strong cost control, while Genting, however, achieves higher returns on the assets and equity, showing efficient use of capital. All in all, Shangri-La is financially stable with strong liquidity, low risk, and high margins, while Genting Berhad is operationally efficient but faces high debt and liquidity challenges. Shangri-La could improve efficiency and asset productivity, while Genting should focus on liquidity, debt management, and
cost control to strengthen performance. That's all from me. Thank you.
In conclusion, analysis reviewed the financial management strategy deployed by Genting Malaysia and Shangri-La Hotel Malaysia during the market recovery years of 2023 and 2024. Sound financial management is invariably evident by a positive trend in profitability ratio, signaling successful revenue generation and effective cost control. Hence, liquidity and solvency ratio were robust short-term working capital and a well-managed long-term debt structure. Furthermore, an upswing in efficiency ratio will attest to management skill in optimizing operational output from their asset base. Next, Shangri-La Hotel Malaysia demonstrated superior financial management in terms of achieving efficient profit conversion from its revenue base compared to the Genting Malaysia. Shangri-La Hotel Management was highly successful in leveraging the strong demand from premier accommodation to secure high average daily rate. Lastly, Genting Malaysia and Shangri-La Hotel, one must consider the entire spectrum of specific financial indicators and the broader economic context impacting their operation. Thank you.